Hey there investors, this is Tyler from Augury Research. In this video, I want to teach you how to use the Augury Investing Journal. This is an incredibly valuable tool for investors, but you have to know how to use it the right way. So I want to take you through the GARP strategy checklist, checkpoint 1, do you understand the business? I want to teach you what my process looks like, what questions you should be asking, and what websites you should be using. So grab your journal and let's get into lesson number 1.
We need to find out what the business does. Here are 3 ways to find this information. yahoofinance.com. Now, once you get to Yahoo Finance, you're going to want to go to the top search bar and type in the ticker. In this case, it's SCVL, or you could type in the company name Shoe Carnival. Once you get to Shoe Carnival's profile, you're going to want to go to the Profile tab and click it. And from here, we get a lot of information, but the information we're looking for is the description of the business. Shoe Carnival Inc., together with its subsidiaries, operates as a family footwear retailer in the United States. The company offers various dress, casual, and athletic footwear products for men, women, and children, and accessories such as socks, belts, shoe care items, handbags, sports bags, backpacks, scarves, and wallets. As of February 2nd, 2019, it operated 397 stores in 35 states and Puerto Rico. The company also sells its products through online shopping at shoecarnival.com. Shoe Carnival Inc. was founded in 1978 and is based in Evansville, Indiana. So that gives us a lot of good information about the business. It seems like this is a business that we can understand as they sell, general retail products, mainly footwear. Out what the business does is to visit Finviz.com. Just as before, type in the ticker into the search bar. Now, this website gives us a nice graph, some basic information about the business. Here are analyst upgrades. Here's the most recent news. And now if we go all the way down to the bottom, we see this is the description of the business. It's the same description found on Yahoo Finance. And then under this description, we have recent insider trades. Here's the third and my personal favorite way to learn about a business. You're going to want to visit sec.gov. This is the SEC's official website. Once you're on the website, you're going to want to look for the Filings drop-down tab. Scroll down to Company Filing Search and give it a click. Now, you can search by company name here, or you can search by company ticker symbol in the fast search box. This is the company's profile with the SEC. This contains all of the company's SEC filings. You can scroll through for years. Without getting into too much detail on all the different types of filings, for this particular situation, we're going to want to look for the most recent 10K, which is also known as the annual report. We're going to find that here. You want to click on the Documents button, and then once you get onto this page, you're going to want to stay at the top and click on the 10K. Now, generally, the very first thing I want to do when I open up an annual report is 1, check the date. That's found here. And 2, check the amount of shares outstanding. That's found here. Depending on the company, the placement of these 2 packets of information will be a little bit different, but generally they should be on the first 2 pages. Okay, now we're going to want to click onto the business. This will give you a lot more information than using websites such as Finviz and Yahoo Finance. As we can see, the description is a lot more detailed, and we have updated numbers with how many stores are currently operating. I like that the company's focused on the shopping experience of the customer, and they're really targeting repeat customers who are very sticky and great for long-term businesses. I like the fact that the company is diversifying outside of general retail and has an e-commerce site and a mobile application. One of my favorite things about this company is they're very value-oriented, right? They're looking to give a product that's valuable to customers at the right price. And then they say that here, that their customer is value conscious and someone that has moderate income seeking, brand name footwear. Another thing I like about Shoe Carnival is that they're focused on becoming more efficient. They're investing their resources in improving efficiency across all types of technologies, warehousing, order management systems, traffic management systems, and supply chain. As a business becomes more efficient, they don't have to rely on top-line growth to return money to the shareholders. And that's important to me as a value investor. Let's look at Shoe Carnival's growth strategies. It says here that they're investing in a CRM program, which is customer relationship management. What they essentially are doing is learning about their customers' shopping habits, tendencies, and using that information to deliver them more offers. These offers seem to be going through their loyalty program, e-commerce website, and mobile application. Shoe Carnival uses cluster tactics. Clustering involves opening 2 or more stores at approximately the same time. This strategy gives Shoe Carnival cost efficiencies by enabling them to leverage store expenses with respect to advertising, distribution, and management cost. This is something that probably works pretty well in a bull market when the economy is expanding. So, if we know that Shoe Carnival has strategies to grow in a bull market and they're focusing on cost efficiencies in case of a recession or an economic slowdown, that's a pretty flexible and diverse business. Let's take a look at Shoe Carnival's historical store count. We can see from 2015, 2016, and 2017 that Shoe Carnival was opening a lot more stores than they are in the last 2 years. They were also closing a lot more stores, and I think the reason why we're seeing 2018 and 2019 slow down so much is because the company seems to be really focusing on becoming more efficient. If the entire economy is going to take a slowdown, that might prove to be beneficial. Down here, this table shows us all of the stores that they have across the US. I highlighted a couple names on this list just in case, Florida may be hit by a hurricane, as well as Puerto Rico. And considering that that's 35 of their 392 stores, that might be a hit to business. I also highlighted New York and New Jersey because, as we know, coronavirus is prevalent in those areas, and it doesn't seem like they have much exposure. But if we go down a little bit further, we see here that the company decided to close down all of their stores from March 19th to April 2nd. They also say that they're utilizing their website, mobile app, and e-commerce orders to drive sales. Over here, we learn about the Shoe Carnival's loyalty membership program. We learn that it's growing at 11% year over year, which is pretty good. And we also learn that Gold Tier represents 15% of our members, and the average transaction value for these customers was 38% higher than non-Gold Shoe Perk members. That's pretty good. That means that their strategies are working because they're getting more money out of their favorite customers. I also noticed here that Shoe Carnival has a drop shipping program. I thought that was pretty interesting and something that I might want to look into before buying the stock. In this section, we learn that Shoe Carnival relies pretty heavily off of Nike and Skechers, who combine account for 41% of net sales. Nike alone accounts for 30% of sales, and Skechers accounts for 11%. While it's unlikely they ever lose these customers, it's something you're probably going to want to jot down in your notebook. Let's look at distribution. Currently, Shoe Carnival has 392 stores. In this section, they tell us that our facility is leased from a third party and can support the processing and distribution needs for up to 460 stores based on current configuration. So they do have some room to grow without further investment. They also tell us we have the right to expand the facility by 200,000 square feet, which would provide us processing capacity to support approximately 650 stores. That's pretty good. From the competition section, I noted that Shoe Carnival tells us many of our competitors are significantly larger and have substantially greater resources than we do. However, we believe that our distinctive retail format, in combination with our wide merchandise selection, competitive prices, and lower operating costs, enables us to compete effectively. I also noted that Shoe Carnival has 5,100 employees, of which 2,900 are employed on a part-time basis. I thought it was pretty important to note that Shoe Carnival has 3 distinct peak selling periods: Easter, back to school, and Christmas. Before going any further into the executive team, I think we have a very good idea of how this business operates. On our checklist, I would give this either a 4 or a 5. Okay, after we've gone through the 10K, we're going to want to go back to the checklist and fill it out, right? So in filling out the first line, we want to ask ourselves, is this a business that I feel comfortable owning, right? And for me, I would say this is probably around a 3 or a 4. And for the sake of this, I'm going to mark it a 3. I like the business. I think there's a lot of upside or value. I think it's a sustainable product. I like what they're doing. But is it the best business out there? I'm not sure. And that's part of investing, is we have to find the best business at the right time. We don't want to dance around too much, allocating our money to too many different companies. We want to find what's the best opportunity and then, kind of bet big on that opportunity.